Well, I'm looking at the U.S. non-farm payrolls survey for June, and it's actually pretty good. Now, whether this is good overall is a matter of opinion, because a good report on the employment situation means we're probably not going to get an interest rate cut from the Federal Reserve, and that might not be the best thing for the economy. But let's take a look at the numbers. So overall, non-farm payrolls for the month of June rose by 147,000. That's a pretty good number. Wall Street was looking for 110,000, and we've had a consistent pattern of the actual numbers coming in better than the expectation. Also, looked at the revisions for April and May. They're both up, so we have more jobs created than had originally been reported in those months. Also, a really positive indicator on the economy. The unemployment rate comes from a different survey, the household survey, as opposed to a survey of establishments. And that one showed that the unemployment rate was down to 4.1%. Now, that's the lowest since February. And again, the expectation was we would see it at 4.3%, so a better labor force. If you look at the details, they're a little mixed. I mean, if you look at the employment numbers, the first thing I look at is full-time work versus part-time work. And full-time work is up. Part-time work is down, so if you're going to look for strength, you look for it in full-time. That's good. In terms of the unemployment rate, maybe not as good. Again, comes from a different survey. That one showed fewer jobs created, also showed people dropping out of the labor force, so people not looking for work anymore. Participation rate went down. And that means the drop in the unemployment rate is not for the right reason. So you need to keep an eye on that. Am I convinced that the U.S. economy is doing that well? I'd like to be convinced. I think if you look at some of the other indicators, GDP or economic output in different sectors, different places, you're not really seeing it as strong as this would suggest. However, this is an important survey. And if it's showing that people are still finding work, and we know there's other surveys that show there's still a lot of job openings out there, that's really what's important to the Federal Reserve. They look at inflation and they look at employment. They have a dual mandate. Not seeing a ton of inflation from this. If you look at earnings up by 3.7% year over year, I mean, that's not ideal, but it's maybe neutral for them right now. What they're looking at is the employment figures, and those are unambiguously good. And again, unambiguously good report on employment means you're probably not going to see that July rate cut. Certainly the markets think that. Looked at the bond market, and it's really not figuring that's going to happen. So you are seeing bond yields spiking a little bit higher this morning. So again, the Fed funds rate target is 4.25 to 4.5% right now. Relatively high compared to other central banks, but based on this, looks like that's where it's going to stay.